Welcome back to Market Day Report. Mark Oppold. We head to the top of the hour. Our last update here, the grain and livestock trade on this Wednesday. Let's go to Chicago and helping us get things done and wrapping it up for the day. Our good friend Todd Horwitz, live from the floor at the CME Group. Todd, back and forth. Other analysts, we've been hearing a little bit of commotion behind them. The options pits, I guess, get a little flurry of activity every once in a while, but pretty much elsewhere, the commodities, kind of a quiet day, it sounds like.
It's pretty quiet, but we're all waiting for the wine and for the to get on XM 147. You know, I've been listening. I'm getting hungry and thirsty while I'm watching it.
There you go.
Anyways, so you know, we're really fairly quiet, but every once in a while there's a burst, there's an order, and really we're seeing a lot of the same action in the grain space. You know, it's right around those levels we've been watching. You know, corn's around 340, beans are stuck in that range between 960 and 1020, and wheat continues to hold up, which I think is going to move much higher eventually here. I think you look at crude. Now, this is one thing I just want to point out if I can. You know, we talk about news all the time, and this morning you had the most bearish report you could ever get on crude oil. It had already rallied yesterday, and of course it went straight up from there. So that's one of the things you always want to be careful of. A lot of times markets have a way of anticipating the information. So that's something to keep an eye on. And of course the dollar finally made it over the dollar, over par, and that's an issue. But I think, again, I think our farmers and producers figured that out, and they were pricing that in a long time ago, and they're ready for this. So I think once the dollar pulls back, I think they're going to be extremely happier because I think they'll get some good action.
You think the dollar, we're looking at the dollar here now at 100.45, so you think it will pull back from these levels and not go to 101, 102 or more?
I mean, it could go to 101, 102, but again, here we've already kind of priced that in, and like I've said for the last couple of weeks, even when we were at 97, I felt that the farmers kind of had this in their markets already. I think 102 is the absolute stiff top if it can get there. I don't think it will, but I wouldn't be afraid. I'm selling dollars here. I think they're going to go lower, and I think we're going to go back all the way back down to the 95, 94 level before we even look to think about being a buyer again.
How about that? And they're pretty well bunched together as you look at those futures here. Now, I'll go back to crude. We're seeing a little bit of a pullback there. You mentioned crude, and it was sharply higher early, and indeed it was. December up to 46.41, but right now, Todd, just to give you an update, 45.72, now down only 9 points, but it is lower off of those highs.
Well, again, I think this market was more of a short squeeze bounce that we saw. 46 was my target. If we bounced from 42, which was one of my targets on the downside, then 46 I was going to resell it, which I have. I think I'm not really interested in getting long crude or trying to hedge my fuel costs for next year until we get to 40. I think we'll see 40. This action to me just tells me that we got quite a few people too short that over anticipated all these numbers. They're getting them out right now, and as they get them out, I think we'll see a push back down to the downside.
All right, I'm going to look at these numbers one more time. We're going to give you a break. We'll come back and talk about an active trade. Talk about that is livestock here, cattle and feeder cattle. But here are the numbers. Those are folks tuning in to look at what the numbers are one last time in the grain complex. December corn down 1 3/4, back below 340, 339 3/4. Check the soybean trade. Again, as Todd says, been in a range, still is. January down 5.5 at 984. And the wheat trade back and forth on the day, still a bit lower. December Chicago down 0.5 cent, below $4, by the way, not by a penny or so. Kansas City December down 4.5, and the Minneapolis nearby contract there is up 3 1/4, although the contracts are just a little bit lower, but nearby December is a bit higher. Take a break. We'll come back and check a very active livestock trade and Todd Horwitz comments coming up in 1 minute. Welcome back to Market Day Report. 10 minutes to the top of the hour and our last look at the livestock trade. Todd Horwitz live from Chicago. It's Bubba Trading, BubbaTrading.com, a website with a lot of information and a lot for producers, farmers, ranchers, as he wants to help you put together a marketing plan. You mentioned the range-bound grain trade. Livestock, not so here. Live cattle, are we above the top end of the range? What do you think about the cattle, the top we've seen here today over 108?
Well, my original targets were 106, 107. We've now broken out, but it's really more important to me the way they broke out. This, to me, Mark, looks like I would call this the final phase of this continual move. This looks like a blow-off to the upside. This morning's rally has been basically perpendicular, going straight up. So to me, that's the end of this phase. Now, again, I'm still very bullish at the markets, but now I need to see and want to see and prepare to see a little bit of a sell-off. I think we need to go back down to probably 104. and maybe 103 to look for some new buyer and new money to come in and push them even higher. I'm very bullish the space, but I think that now we've overextended where we're going to go. I don't think there's going to be much power here. If they try to push them up much farther, I think the break will be that hard, much harder coming back down. Because there's going to be a little bit of sell-off here, but I think 108 is a good area to take a stab if you're a trader, and if you're looking to hedge some, I think that's a great number to put against it right now.
Now, we did see the Fed Cattle Exchange from Superior Livestock, and they were selling at 106, 108 in that auction here at 10 o'clock Central Time. So the 108 would play into the current cash, though.
Yeah, no, I understand. Again, we see this in markets, especially in futures markets. We see some overexuberance. We're seeing it in feeders right now, but not quite as hard as we're seeing it in the fats. And again, these are way that markets trade. You get a few too many speculators on the wrong side, and they start, grunting and groaning, trying to get out. And here they are. I think they're just about out, and I would look for a little bit of pullback. And believe me, the pullback is much healthier than anybody realizes for an overall market. The way we want to see it walk up. We want to see the markets go up like this, not like this.
All right.
It's very important.
And now looking at the lean hog complex then, and get your thoughts before we're going to give the numbers here if I have a minute before we leave you. But the lean hog complex here, over $48 here. You were looking for 44, 43, I believe, to maybe step back in here. What do you think about hogs?
I think they're a little bit overextended, and you'll never leave me. I think they'll be a little extended. I think that they're going to come down a little bit. Now, again, they've been very strong, and they've been really acting strong the last few days. So either we're going to have to break out to the next level, but I don't think so. I think we're going to see a little bit of a pullback, and I'm not an aggressive seller here, but certainly I'd be looking to take some profits or lock in some levels here. We've had a 20% rally since the bottom. So I think now is the time to take a look and put some money in your pocket and then look to re-enter a little bit later.
So now, if you're a producer, would that same hold true for cattle? If you think we're a little bit overextended, do you want to hedge some at this level where we are, cattle and or hogs?
Yes, I would. I'd love to roll up my bases. In fact, the guys that I work with have all rolled up their bases, and they're now protected at the 108 level on the way down and at the 48 level on the way down in hogs. So, yeah, that's something very important we'd like to do.
Very good. Todd, we're going to have you back tonight in our evening news. We'll wrap things up for the day. Quite a day in the livestock complex. We'll see what happens tonight.
Thanks, Mark.
Thank you. Todd Horwitz, Bubba Trading, BubbaTrading.com is the website. We promised the numbers. Here we go. One last look before we hand it back to Janet. Looking at live cattle, $2.50 higher. Todd Horwitz, for one, thinks maybe a thing. He still likes the cattle complex, maybe a bit too far, too fast. We are now just below 108 and now $2.50 higher. Feeder cattle higher as well. Again, not as much. The November, by the way, goes off the board tomorrow, so we watch January as the lead. Starting tomorrow, and it is now 124.65 on the January. That's up $1.63. March is up $1.44, 120.22. By the way, we'll talk to Ed Serwin tomorrow on our Market Day Report in the 8 o'clock hour. He'll give us a look at the cash feeder auction markets around the country. Stay tuned for that. And looking at the lean hog complex one last time, we are higher there as well. December up over $2 and over 48 right now. About only 8 points, Janet, from the high of the day as we head to the top of the hour.
All right. Thank you very much,
Sure,
Mark.
you bet.